Well, our weekly market update, the 4th of July 2012. Joining me on the program is RP Data's Senior Research Analyst, Cameron Cusher. Cameron, how are you?
I'm well, thanks, Tim. How are you?
Very well, thank you, mate. Let's get things started perhaps with a little bit of a wrap on 2011-2012 financial year that's just gone.
Okay, so across the combined capital cities, property values fell by 3.6% over the financial year. But I think one of the important things to note is that over the first 6 months of 2012, they're actually down 1.2%. So that suggests that the rate of decline is actually slowing. There was two capital cities where property values actually recorded growth over the financial year. That was Darwin, 0.2%, and Canberra, 1.3%. And then on the other hand, the weakest housing market was Melbourne, with values down 6.6%, and Hobart with values down 5.2%. I guess the other thing we've been seeing through much of the financial year is that sales volumes have continued to decline, and listings have remained at levels that are quite high based on historic levels.
Mm-hmm. Interesting. I guess I'm interested in the comment on the two better performing markets, Darwin and Canberra. Any particular reason that you can point towards those being better than others?
Well, Darwin had a fairly large correction, and if you actually look at values there, they're still down about 16% from where they were at their peak. And Canberra, obviously wages are quite high there. The supply of new land is pretty much completely controlled by the territory government there. So, you know, if things get a little bit tough, they just stop releasing new product to the market. So that's probably the two reasons why they're going quite strong. Obviously, Darwin also fairly heavily linked to the mining and resources sector.
Yeah.
And although we did get some budget cuts in the federal budget, not too many people in Canberra have lost their jobs following the budget announcement.
Sure. All right, well, look, moving into more recent times, the RP Data Index results showing that Adelaide was the weakest performing city over the month of June. Is there a trend developing there?
Well, not really, because last month it was the only capital city to actually record value growth. So, because Adelaide is a little bit of a smaller market, it can be a little bit volatile, and I guess the more important thing to have a look at is really the trend.
Yep.
And if we have a look at the trend in data, it's not too bad in Adelaide. So Adelaide values are only down by 2.4% over the year, compared to 3.6% fall in values at a national level. So Adelaide's doing quite well, and if you have a look on an annual basis in terms of the rate of decline across the city, it's been fairly stable, and in fact the annual rate of decline has been improving over recent months. So I don't think it's cause for concern. Obviously, if it continues falling at that rate, that is a cause for concern, but we're not expecting that will be the case.
Oh, fair call. Interesting. Are there any other capital cities that we need to keep an eye on in terms of their performance?
I think markets like Perth and Brisbane, those two markets have really seen no growth in values over the last 5 years or longer, and they're certainly starting to improve. So over the last 12 months, both cities firstly actually recorded growth over the month, but over the last 12 months, values in Perth are down 1.4% and values in Brisbane are down about 4.7%. But if you looked probably 6 to 9 months ago, both of those markets would have been down at about 8.5% over the year. So they are starting to slowly improve.
Yeah.
And it'll be interesting to see if we can start seeing some growth on an annual basis by the end of this year.
Right, well that's good news. Moving on to a bit of a favourite of mine is of course auctions and clearance rates and so forth. We've noticed the clearance rates over the last perhaps 4 or 5 weeks here have been all over the place, but I'd certainly put that down to a couple of public holidays getting in the way of marketing campaigns. What's your take on the auctions at the moment?
Yeah, you're right about the fact that they have been a bit all over the place, but the last couple of weeks there's actually been a bit of an improvement across Adelaide. So last week about 44% of auctions were successfully sold, compared to 42% the week before and 38% the week prior to that. So there is a trend of improving auction clearance rates, and that's a trend we're seeing right across the combined capital cities as well. So of course, we're a long way from where we were back in 2009, early 2010, where clearance rates were very robust.
Yeah.
But it is encouraging that they are improving a little bit and at better levels than they were over the second half of last year.
Yes. Any thoughts on the numbers of auctions being conducted, particularly in Adelaide? Are we trending up or down in those numbers at the moment?
Again, it's a little bit all over the place. So there's about 80 auctions last week and 60 auctions a week before that, which is lower than it was at the start of the year. I see back earlier in the year we were usually up around 80 to 90. So it's a little bit interesting to see that it's all over the place, but obviously people are still acting cautiously and maybe not taking as many properties to auction at the moment. But the last couple of weeks there has been a higher trend, and that may continue. Yeah,
sure. And I guess the top and bottom end, well, perhaps the first home buyers market and the premium end of the market, any movement, any particular trends there?
Well, we're still not seeing a lot of first home buyers come into the market at the moment, and unfortunately South Australian government isn't offering some of the incentives that some of the other states are offering for first home buyers. But if we have a look across Adelaide, for example, the most expensive suburbs are actually doing quite well. Over the last 12 months, they are up down 4.5% compared to the most affordable suburbs, where values have fallen by 6.2%. So it's a little bit different, the performance of the Adelaide market to a lot of the other major capital cities, where you're seeing that it's the premium end of the market which is actually the weakest. It's the really affordable suburbs which are the weakest. And again, for first home buyers, that could be encouraging, could give them some of hope of entering into the market if those values continue to come down.
Sure. All right. Well, look, I guess a final question for you. It would be remiss of us not to ask if you have any predictions moving into a new financial year as to how you see the year unfolding.
Well, interestingly, last month, most of the capital cities actually saw a bit of a rebound in value growth, and we're putting that down to the effect of the interest rate cuts we've got over recent months that are finally starting to provide some stimulus to the housing market. Obviously, the trend's more important. It'll be interesting to see whether or not that recovery can be sustained. But overall, I think that you'll see better market conditions over the second half of this year than you did over the first half of the year. And you may even see some low levels of capital gains coming back into the market in spring, given that the market has now been down for quite a while. You might see some confidence return. I guess the thing that would be a good trigger for that is if we could see the amount of stock on the market actually ease a little bit.
Yes.
You know that there's a lot of people not actively really trying to sell their properties, but we're not seeing a lot of new stock entering the market. So if some of these people could actually take their properties off the market, realise that it's not going to sell at that price, and we could get some new stock onto the market, it might encourage some buyers to go and do some deals out there.
All right, excellent. Well, that sounds to me like as the weather warms up, hopefully the market might as well. Cameron, thanks very much. I know probably a pretty busy month for you at the end of the financial year, so thanks for joining us.
Not a problem at all, Tim.
All the best, and that ends our wrap-up of the market for this week.